Welcome back. It's Valentine's, it's Friday. Thank God it's Friday. But more importantly, we are here so that you can ask us anything you want to know about stocks. The hashtag is AskMbithe. Before we actually delve into this subject matter, we just want to give you a highlight of what is happening on the Nairobi Securities Exchange. The NSE is receiving a lot of love today. 16 million shares have traded in Safaricom. That's a huge sum. That takes you to over $1 billion in terms of the value of that one trade alone. Kengen is also another top trading stock, 10 million shares traded. I keep saying if I just had like one little wish I could be granted today, it would be just to be given 13 million shares in Safaricom. And I'll be more or less home and dry, maybe for even 4 generations. But that's me. But why do I like Safaricom? Why should anybody pick Safaricom? What are my considerations when I'm picking any particular stock on the Nairobi Securities Exchange? We want to see if we can answer this later on in the show. But for now, in the Ask Mbithe segment, we are joined by our very good friend Brenda, talking about stocks. Happy Valentine's, Brenda.
Happy Valentine's Day to you too. Thank you so much for having me.
Anything exciting happening? Have you received some shares or some flowers, perhaps?
Yeah, I've received a few gifts here and there, but at night, that's when I'm going to receive
You're going to receive the major gifts. Okay, fantastic.
Yes.
Welcome to the show.
Thank you for having me.
All right, let's just talk about stocks. What 100%. Do you want to know about stocks?
So when someone just tells you, you know, have you ever invested in stocks? It just sounds so complex and scary. So for someone out there who doesn't even know what stocks are, do you care to just break it down and just tell us, like, from someone who's like 17 trying to understand what stocks are? Okay, so stocks, if you're talking about stocks, you're really just trying to get a piece of a pie of a bigger pie. So if you have, like today, everybody is, okay, at least most people will be receiving bouquets, right? So the whole thing is called a bouquet of roses, but inside we'll have maybe 10 or 20 or 30 stems, depending. So typically a company would be the bouquet of roses, and then a stock would be one particular unit that makes up that entire bouquet. So if you're talking about Safaricom would be the bouquet if we're talking about the flowers today. Yeah. And then our stock in Safaricom would be the individual numbers that make up the entire entity of Safaricom. So you'll have some companies have 1,000 shares, some companies have 1 million shares, some companies have 100 million shares. It depends on what they want to achieve at the point of registration. Wonderful. Yeah. Makes it so much easier to understand.
Roses
now,
and
how do you know which is the best stock to invest in and which one is not performing as well?
Well, a couple of things you need to consider. First, you have to consider what do you want to achieve if you're buying stocks. Before you even look at stocks, typically you would want to have a portfolio that has other asset classes because you don't want to put all your eggs in one basket. And I'll keep coming back to the rose story just because it's Valentine's. Yes. If you just buy roses today and you want to appreciate a partner, for example, and the only thing you ever do is buy roses on Valentine's Day, I can promise you that relationship will not last for long. You have to put roses into that relationship, you must put communication in that relationship, you must put many other things just to make it, flavorful and fruitful in terms of what you're looking at. And that's the same thing when you're looking at your own investment portfolio. You will have stocks, but you also have other asset classes so that you have a flavorful investment portfolio. But that said, now when you come to stocks, a couple of things define what you want to do. Do I want to earn a return, which is a dividend return? Or do I think that some of these prices might go up? Now, what's a dividend return? Every year, some companies, especially the mature companies, the likes of East African breweries and the like, they will distribute part of the profits that they make to their shareholders in the form of dividends. They'll pay you a shilling or 2 shillings or 3 shillings. Like recently, East African Breweries paid its shareholders 3 shillings as an interim dividend, and then it will also pay another couple of shillings before the year ends. So what happens is you would compare the number of the shillings that you paid as a dividend, you compare it to a price. It's like saying, if I put my money in fixed deposit account, I'll be given 5%. So when you compare the dividend over price, it will give you a percentage, and you tend to get, NSE has stocks that do from 0% all the way to maybe 8%, depending on the dividend, and then depending on the price that you bought the stock at. So that tends to be, I want to buy these stocks because every year they'll give me 8%. So if I invested 100,000, I know every year I will be getting 8,000, 8,000. Then there'll be the other person who says, I think I can see some names that will probably double in price, or they'll probably go up 20%. in the next year or in the next 2 years.
Okay.
And they refer to that as capital appreciation. So in other words, it's saying, like, I'll use the example for Valentine's again today. There could be a flower, a person who sells flowers who bought them maybe last week. If you were buying flowers today, they're double or triple the price.
Yeah.
So if the person bought them last week and is selling today, they've made double or they've tripled their money or doubled their money. Now that's capital appreciation. So there could be someone who looks at the stock exchange and says, this one, I think it can double my money in whatever period of time. So that became now capital appreciation, depending on what you want to achieve on the stock market.
Okay.
Yeah.
So after you understand what a stock is, you understand what exactly you want to get out of it, how do you even start? Where do you go to invest in this stock? What are the processes behind it?
You open a stock account, the same way you'd open a bank account. And last week we were discussing a mobile platform that one of the stockbrokers has actually brought to the market.
Yes.
And this is Genghis Capital, and you download their app, and it's called Jikuze. And that's available on Android. It's also available on the Play Store as well. Then you go through an online account opening process. They validate it, and then boom, you can be able to trade. But it's not just Genghis that facilitates that. We have over 10 stockbrokers who are actually licensed by the Nairobi Securities Exchange.
Yeah.
And actually, if you want to know who they are, you go to the NSE website and they will give you a list of all these brokers and who they are. You engage with them, you open an account, then you start trading. Now the next question is, okay, I've opened an account. It costs you nothing to open an account. It's free of charge to open an account. The cost of that account now comes when you transact. Like you open a bank account and you either choose a bank account that gives you a flat fee of maybe 200, 500, 1,000 depending, or you have the option of opening a transaction account where you're charged if you transact. Now the stock brokerage accounts, they charge you when you transact, when you come and buy a stock or you sell a stock. And we've had rates from 1.75 all the way to 2.5% of a particular transaction. It's slightly more expensive than you would pay for M-Pesa transactions. M-Pesa tends to be 1%. If I said 20,000, I'll be charged 180. So M-Pesa is 1% give or take. The stockbrokers, I don't know why, but they always charge slightly higher. It covers the administrative cost. They give you research, etc. I circle back to the Genghis app that they gave us. They told us it's 2.1%. Then they also said that you get free research to understand what should I be buying, what should I be selling. So the next step is after you open, then you need to do some research and see what are the good opportunities here. It's the same way if you're going to buy roses, you probably visit 1, 2, or 3
see which one is best.
flower shops and see, okay, fine, who's giving me a better price, who has better quality, etc.
Okay.
Yeah.
Makes a lot of sense.
Yeah.
Now, when you're trying to invest in stocks, especially, actually, let me just rephrase the question again. Where the current market in Kenya is today, would you encourage me to invest in stocks?
I would encourage you to have a plan in as far as your investments are concerned. So there's, with anything, it's better to start with what does the framework say? What do the people who've gone ahead of me and succeeded in it say? So anytime you look at investments, typically there is an investment pyramid. So an investment pyramid says, I want to secure the bottom of my pyramid. I want to have a solid base before I start getting into risky assets. Anytime you're investing, there's risk, there's a return. Valentine's. I could give this girl that I'm just attracted to flowers. She could not acknowledge or talk to me, or I could stick to this person I have been with for a very long time and give them flowers because they will appreciate. So at the very bottom, and this is a conversation that we can have later on in the show, we do have a financial coach with us in the studio. But at the very bottom is, do I have emergency funds? If I get laid off work, do I have at least 3 months worth of my monthly income? Can I even challenge myself and go to having at least 1 year worth of my monthly income? So that in case anything happens and we're in a space where the economy is not doing too well, anything could happen. You don't want to lose your job and then have to change your lifestyle. And then thereafter you're like, okay, I have my emergency funds and that is secured. That you put in a savings account, you really don't want to have access to it. The next thing you want to do is to put money in assets that have a very low risk of losing your capital. Government bonds, the treasury bills, and mostly people tend to go to money markets because money markets, you put your money with them, but reputable ones and the ones that actually have proper governance structures, because you don't want to get into a situation like we have seen in the public, in as far as Amana is concerned, you're not able to get your money out. So you need to do a bit of asking around, going to visit the offices, trying to understand how do you run this operation, how do I get my money out. When you do this bonds, fixed income gives you your capital after a certain period of time, a year or 2 years or 3 years, or if you do the money market, it gives you liquidity. What you do, or what the professionals and the experts and the people who've succeeded propose, is when you make money, then invest in the next class, which is stocks. So if we start, for example, with 100,000, if you put it to the government or put it to the money market fund, you'll make 10%. Now, when you make that 10%, which is 10,000, instead of taking your 100 and putting it into a risky asset, you take the 10,000, then you open a stock exchange account, then you trade with the 10,000, so that in case anything happens to the 10,000, your 100 is still intact. And then if you're going to go to the next class, which is investing in my friend's business, unfortunately for us, we start in the reverse. We invest in our friend's businesses and lose money before we move to the next thing. If you're going to invest in your friend's business, if your stocks give you another 10,000, take the 10, chukua ile kitu imeza, weka into the next one. Then the genesis for the investment pyramid is to say, always preserve and protect your capital. Any money that you have put aside for an investment, protect it. If it bears fruit, then you can go to the next class of investments as you go along till you get to the very top.
Great. Broke it down very well for me. And I think those are all the questions I have for,
those are all the questions
for today. Thank you for having me.
All right. Thank you so much for being with us. We hope to have you again on our show.
Yes, definitely.
All right. We take a short break and we come back. When we come back, we will be joined by Mr. Robert Yahweh. He is a financial coach and he's going to be teaching us some of the key considerations if we want to now start selecting stocks and investing. Again, the NSC has been showered with tons of love, and I truly wish I could get somebody to just give me 30 million Safaricom shares. I'll still keep putting it out there. It might not happen today, but maybe one day it will happen. As we come to a close of, as the NSC comes to a close, we have seen 60 million shares traded in Safaricom, 10 million shares traded in Kengen. We'll give you a brief update after the break. See you in a few.